Hello and welcome to the March edition of the Private Finance ESG 5 and 5 podcast, where we spend 5 minutes exploring 5 key ESG trends shaping the market. I'm Vishal Saxena from Climate and ESG Capital Markets, and today we'll be joined by Bill Gilbert, Head of Carbon Markets, to look at innovation in the voluntary carbon markets. Bill, a very warm welcome.
Hi, Vishal. Hi, everyone. Great to be here.
So let's jump in. First off, it's an exciting time as the voluntary carbon markets mature and help address some of the challenges in the compliance markets, such as how around 80% of greenhouse gas emissions are not covered by regulated carbon pricing schemes today. What is clear is that development of voluntary carbon markets is key to mitigating emissions that cannot be reduced directly. However, there are some challenges that have so far prevented this market from growing further. In particular, the market remains over-the-counter in nature, implying that asset and transaction information is limited, not to mention that these are bespoke and bilateral. And secondly, there are a large number of low-quality carbon credits out there, thus undermining the credibility of the market. Bill, what are your thoughts on the innovation happening in the voluntary carbon markets and the interventions that are supporting its development?
Thanks, Vishal. Yeah, it certainly feels like the market is changing almost every day. So plenty happening, and a lot of it is very positive. The challenges you've drawn out, they are significant, and it's not necessarily always easy to overcome them, but a lot of work is in progress, and there's a lot of goodwill and a lot of people working together to really try and scale the voluntary carbon market. The key things that you mentioned there, price transparency, accessibility, and trust are all items that really have been missing from the market and now are just beginning to come back into it, largely through an effort of a lot of people, and in particular from banks getting involved. Carbon Place is a great example, actually. It actually is a platform formed from 7 banks. The 4 founding banks were CIBC, Bank Itaú, NAB, and NatWest, and now been joined by UBS, Standard Chartered, and BNP. And all are working together to bring the capability of the banks, the trust of the banks, to provide a platform for their customers. It's fairly unique in terms of what we've set out to do. The platform includes a wallet, so a ledger, effectively, and that ledger will be able to hold climate assets on behalf of the customers. It's built on the blockchain, although it didn't have to use blockchain, but there were certain reasons why we decided to use it. So the wallet will provide a great ledger for our customers to track their the climate assets. Another interesting thing about the platform is that it really helps to mitigate anti-money laundering and know your customer risks, which are a formidable blocker in the carbon credit market, because a lot of the buy and sellers don't really know each other, have to go through lengthy onboarding processes, and this platform really just removes those hurdles to buyers and sellers being able to transact with each other. And another aspect actually is also the recently announced collaboration we have with Climate Impact X, which is a up and coming exchange based in Singapore. We feel that by Carbon Place and Climate Impact X working together, using their curated exchange and Carbon Place's unique settlement capabilities, will really help add further scale to the voluntary carbon market and accessibility, of course, and also that transparency. So the other aspect that it brings is liquidity, which is exceptionally important for that trust and transparency. Thank you.
Thanks, Bill. Really interesting to hear those insights and perspectives. It's definitely a space to watch. And that's all we have time for today. Thanks for listening to this month's Private Finance ESG 5 and 5. As a reminder, please be sure to check out our monthly newsletter on our Insights Hub that we'll be releasing alongside this podcast. This will spotlight the use of carbon offsets by investment managers, exploring use cases from players such as BNP Paribas Asset Management and Aberdeen Standard Investments, as well as looking at innovation in the voluntary carbon markets and noting the need for offsets to focus on residual emissions. So definitely not one to be missed. Finally, if you like this episode, please follow the channel and click the notification bell so you can get future episodes when they are released.